If you ever thought that the reason why you are not consistently profitable yet as a forex trader is because of your trading strategy, raise up your hand. It is obvious that a struggling newbie trader might think that his or her problem is because of trading strategy, but that is a lie. Let me show you something from my screen. There was a time I did a video, I was talking about the three major skills that a trader must have before he will talk of becoming consistently profitable. I think in that video I mentioned trading strategy, then I talked about risk management and then trading psychology. I made it obvious that out of the three skills or out of the key skills I mentioned there, that trading strategy is actually the easiest. Most newbie traders might think, especially when you are still beginning, you might think that strategy is your problem. You keep on jumping from one strategy to the other, looking for that particular strategy that will make you to stop losing money. And it's going to take some people a whole lot of time before they realize that there is nothing like a strategy that will make you not to lose money because losses are part of the game. And look at this now, you are going to see something. And this is actually a very good trading strategy that has been backtested and has also proven to be consistently profitable over a large number of data sets. And let us break it down and see the components. Some traders are going to like something like this. Now, if you check here, you see that we have other block here. This is another block. This area here, this zone here is an other block. Now, how did I know that is a valid order block? And how do you even know a valid order block? First of all, a valid order block should make that impulsive move that was actually able to break structure to the upside. If you check here, you see that this impulsive move to the upside broke the market structure. This is what we call BOS. And then after that, we are going to mark out this place as a valid order block. So we also prefer, especially SMC traders, when this impulsive move that brought this structure to the upside occurred, we are expecting a fair value gap to actually occur in between, right? So more often than not, when market makes this type of impulsive move, is actually going to leave a fair value gap somewhere here, right? And this is also some of the things we bring together to tell you that this order block is actually valid. So looking at this strategy, the order block is marked as a valid order block because it actually broke structure to the upside, and then we marked it as our order block. Now, what do we do next? We have to wait for price to come back to our order block. But one of the things we prefer is that before price actually comes back to the order block, we want to see this inducement. This is that place where the FOMO traders, the early buyers, actually try to take opportunity of the buy, and then price might actually come back and sweep them out, causing this inducement before it comes back into this order block. So first of all, when you mark your order block, one price to at least sweep liquidity or create a sort of inducement before coming into your order block. So finally, when price now came into the order block, we saw a candlestick pattern. This is actually a rejection candle that showed that buyers are actually locking here. This is the final confirmation to show you that this order block is actually valid and buyers are locking here. This is also a candlestick pattern to show you that buyers are still in control and they still have the potential to push this price to the upside. So because of this now is a valid order block, all I need to do is just to identify the order block. In fact, to make it very simple, whenever price makes that sweet impulsive move that blows structure to the upside, you just need to mark out the origin that caused that break of structure, and that origin becomes your order block. That last bearish candle that actually brought in the bullish momentum candle that broke structure to the upside is your order block. Mark it out and wait for price to come there. When price is coming back to your order block, we want it to sweep liquidity. We want this inducement to be formed. We want early buyers to be taken out, right? And then price will now come into your order block. And once it comes into your order block, you might start observing. Some people might want to see something like double bottom. Some might also prefer to see a sort of candlestick pattern around here that will give you your final confirmation for you to buy. Now, if you are able to sit down in the chart, train your eyes to be able to spot this type of setup 3 times in a week, 4 times in a week, or even 5 times in a week, depending on the number of setups you're able to see in a particular time frame of your choice. It could be 15 minutes time frame or 1 hour time frame. You are going to be making money. So strategy is not actually your problem. You have a lot of strategies like this that works. In fact, all the strategy works, but it is you that be disciplined to make money out of the market. So now, if strategy is not the major issue in this trading industry, what is actually the major issue? That is what I wrote down here, that forex trading on its own is not actually hard. Forex trading on its own is very simple. It is not difficult. What is actually difficult and what makes people lose in this market is not because of strategy. You can give me any strategy, no matter how simple or dummy the strategy is. In fact, I even use moving averages, something as simple as exponential moving averages to take, and it is producing results. That is to tell you that it's not actually strategy, it is discipline that is hard. The discipline to stick with your plan, the discipline to stick with the rules of the strategy, and the discipline to actually manage your risks properly is what is hard. Discipline is hard, consistency is hard. Will you be able to stay consistent? Even when you are experiencing losing streaks, will you still be consistent, following your risk management plan, following the same entry model? It is this consistency that is hard. But some people might say it's a lie. I'll be consistent, I'll be disciplined until you face a real market condition with your real money involved. That is when you will know how difficult discipline and consistency is. Patience is actually hard. Patience is hard, especially those of you that want to be trading a setup like this in the higher time frame. Just imagine where you mark this bullish order block in 1 hour time frame or probably 4 hours time frame. Do you know how many days you have to wait? Do you know how many hours of waiting that will be invested into this market before price even comes back into your order block? And most times, price might not even come back to your order block, and the time you spent is gone. Are you seeing how patience is very important? Patience is difficult, and sticking to the risk management plan is actually hard. It is not Forex in its entirety that is hard. It is discipline, consistency, patience, and sticking to the risk management plan that is actually hard. If you're a newbie, please do not make that statement. Do not think that trading strategy is your problem. Now, let's also go to the real chart. Let me show you something. This is SAUSD gold. I'm currently in 1 hour time frame. Just by observing, you see why I said you need to learn your technicals very well. What you even learn in Forex, you just have a very good understanding of what is happening in the market, and you can formulate any strategy of your choice and still make money from it. Now, looking at what I'm seeing in the chart, this is obviously an uptrending market. Any Forex trader anywhere in the world knows that in the past few weeks, this gold market has been bullish. If you buy gold in a very good buy zone, you are going to be making money. Look at how it has been trending up. It is crystal clear, right? Visible to the blind and audible to the deaf that SAUSD is bullish. Now, what can we see? Okay, let's start from here. Price made this impulsive move that actually broke structure to the upside. You see how this structure was broken to the upside. Now, price also broke this structure again to the upside, broke another structure here to the upside. This is just the characteristics of an uptrending market, making higher highs and higher lows, higher highs and then higher low. This is how to know an uptrending market. Now, knowing the trend of the market is one thing, then knowing when to buy is another thing. If you check this particular setup here, let me show you. If you check this particular setup, you see that when price actually broke structure to the upside, we want price to come back to the origin that actually caused the break of structure. Now, if you check here again in SAUSD, where is my chart? Yes, this is SAUSD. Are you not able to see this place? This is this place where price actually broke. This is the origin that caused this major break of structure to the upside. Even a trader that does what we call break and retest is going to see this. This trader must have taken a trade somewhere here. You see how price moved to the upside, created this resistance level here. This is the resistance level created here. Then price came back and then broke out of the resistance. And you know what happens when the resistance level is broken? Once price breaks a resistance level, it normally turns it into support. This is exactly what we call break and retest. Market broke out of this level and then broke out like this and retested it. And if you come closer and observe this area that price broke, you are going to see the candlestick pattern that was formed here. This is more like what we call the morning star around this place. And after that, you saw how price retested and rallied to the upside. Just imagine a simple trader who was able to observe that break of structure. That's not my aim in this video, right? But at least just imagine that trader that observed when price broke this structure, break out and then retested that area and then put your stop loss below that zone where price broke at, or even below this morning star candlestick pattern that formed here. And then if you target your 1:2, you are even going to see more than that. This trade actually gave up to 1:3. If you check here, this is 1:3.79 risk to reward ratio, which is a wonderful trade just by observing break and retest. That's one strategy on its own. So why are people actually complaining about strategy? But now, away from that, we saw how price actually created that structure, how price actually broke this structure to the upside, and then we want to mark out the origin that caused that break of structure. This is the origin that actually caused the break of structure. That is what we call order block. This particular area here met all the conditions of a valid order block. It's actually a valid order block. How did I know? Because look at this place here, where it's actually broke structure. It broke this structure and made this impossible to the upside. Now, what are we waiting for? If this market, this is 1 hour time frame, is able to come back into this origin that caused that break of structure, a trader is looking for an opportunity to buy. Compare this thing with what happened in that illustration I gave previously in the chart. This place here becomes a buy zone. Are you seeing why I say it? I also added that patience is key. Patience is difficult. Right? The difficult part in this whole business is patience, discipline, consistency. Look at this place now. Just check this place in the next 1 week, and it might take a whole lot of time for price to come back into this area. But once price comes back into this zone and you see confirmation in form of candlestick pattern or maybe chart pattern or whatever thing you see here that shows you that buyers are still locking this place, if you buy, you are going to make your money. How did you get this trading strategy? It is very, very simple. Just observe the trend of the market and then mark out your order blocks, especially the valid order block, the one that actually caused the break of structure to the upside. And when price comes back to that order block, you should be looking for your buy opportunity, and it's actually going to buy. This is a very simple trading strategy. Trading strategy is not the problem. Somebody can also see this thing from another perspective. For example, let me clear the chart so that you see. Are you aware that another trader somewhere must have seen this thing and call it head and shoulder? Are you aware? Because gold has been buying for a very long time, and it is possible that gold is also showing signs that it has exhausted its buying potential. This is what we call head and shoulder for traders that understand chart pattern very well. This is the head, this is the first shoulder, and then this is the second shoulder. If you understand chart pattern very well, you see that this type of pattern shows that sellers are already stepping into the market. And if you check, this is the neckline. Look at how price has already broken out of the neckline, and it's possible that it might even pull back into this place and continue selling. And then if it sets down to this area, which is the order block of the SMC trader, this is where the person will be looking for buy opportunity. This is to tell you the importance of technical analysis. Understanding technical analysis, understand what price is doing. Once you understand price in this level, you can sit down and develop a strategy. What is this strategy? Strategy is just your trading methodology. It will help you to remove any form of emotional attachment to the chart. You trade what your strategy tells you to trade. Once you spot that particular setup, you execute with proper risk management and high level of confidence, and are going to be making money from the Forex market. So if you want to learn how to analyze the chart like a pro and understand the nitty-gritty of the financial market, all you need to do is just to visit my Forex Academy at Western Forex Academy, and you are going to be forced to go through the 20 days consistency challenge, where you will build this discipline, the consistency, the resilience, and the patience we are talking about. These are the skills that will actually make any trading strategy to work for you on the Forex market. So see you there.